All right, let's get right to it, everybody. What's going on? Big shout out to the chat. Welcome to the crash reaction. Here we go. Yeah, there's some Q342s this morning that I had posted. Here was my original post this morning. Just a lot going on here. And let me see what happened there. There you go. Those went to a buck. Those are the 42s this morning. The other ones that I just posted got into right here on the SPY 412 puts. These are for today, folks, because this is happening really fast. I mean, this is absolutely just getting annihilated. But this is what we talked about. And we really have been highlighting a whole bunch of things. And I think, you just go right to the cues. It's all about this chart and the big 382 target, minimum target. Let me get the crab up there. It really is a weekly. It's probably better to be assessing this on a week over week thing as you come down in here. 336.90, folks. That doesn't change, and you just keep playing the puts until we get there. I mean, it's doing something that as we get to target, might be saying more. Might be saying at least 336, maybe 305 on a target too. Could happen. Anyway, big shout out to the chat. What's up, everybody? Welcome. We're going to have Mitch Ray in today. Come bring him in about 15 minutes or 10 minutes, not even. Right at 12:30. 1 second. Great. Get a couple of his thoughts on what this market's all about. And crypto, of course. Crypto, I was looking for that to go to 37,000 right now on Bitcoin, but maybe we need a little bit more time. I don't know. This 336.90, we've been talking about this for a long time. And now you're in acceleration phase. And there's a lot of stuff also on the other markets that just keep pointing to these lower levels. And the other way to think about it is a structural minimum's got to get hit. Structural minimums have to get hit. SPY's hitting its ones on the daily. Let me just bring it out like that. There you go. 336.90 on that's a minimum. Maybe even stretch it out to next week on some put plays. You're down a lot. I mean, you're just a remarkable week already. 359.91 was the weekly high. We just traded 342 and change. So settle in. What's up? I see Mitch is in here. What's going on, everybody? Yep. Get Mitch here in a second. So today's Thursday, giveaway Thursday. And let's see here. Zingla, you're the first person to type in gold. So you win today. Get the gold. Also, I had to move our option session to Monday, folks, not today. I sent out to the members. I had some issues this morning, and I couldn't run the session on a backup hotspot. So we'll be there on Monday with that. All right. You have any questions or you want to get in on that option seminar? It'll be 10 a.m. on Monday. Sorry about that on today. Just really too complicated. Check this out. Right now, here are the cues on a 30-second time frame. This is what's been happening from a harmonic pattern perspective throughout these sessions, and we should look for this again today. So 343 just did a hop level bump. Okay, if we go to target one, this should be your thought going into the rest of the day. We had it this morning. This morning. That was a 30-second chart. That was the first crab bump. reaction, and then just a failure, just straight on through fail. That's what I think we should look for today. If we can get a bump to 344.45 and then rest of the return into the close today. I think tonight's earnings are going to be horrible. That's what the market's saying. And the bigger targets that we've really been lining up for a while, they're going to need time. Think of it this way as well, folks. If this is a weekly chart, and that's what your analysis should be structurally, that we're in this framework of 30 weeks. 30 weeks to get this reaction, okay? You're doing it in half the time. Here we are, week 15, week 14, 3.5 months. Amazing. So, that's how it goes. That's why we do what we do. We've been looking for this crab pattern, and we've seen a whole bunch of them play out. It took a while. It had a lot of gyrations in between, but now, you just shut that gap. You close that gap down. Yeah, great to see everybody today. Thanks again for showing up. Mr. Lodak, hey, what's up? Frashogar, Drip Dried Tie Dye, Rogelio, Mr. Fisher, what's up, Daddy? How you doing? Great to see you. Hope all's well with you and your family. Paris Fisher, PGA, what's going on? How are you? Vegas, Miss Stephanie, Hawk, everyone else, great to see everybody. Settle on in. I'm going to have a great session today. Okay? I think the best thing to do is let me just kind of check you guys in here with the cues. You know the deal there. Let me just do a quick 2 seconds on SPY, and then I'll ring Mitch here in 2 minutes. So Mitch, stand on by. Great to see everybody again. Listen, I'm going to throw something out here because we know that the SPY is all about this daily time frame, but we need to talk. I mean, we really need to have a talk here on what's happening with this massive, nasty return phase that go to my Twitter page. Been in front of this on here and then up here for the reaction, and the return phase was on a dime. And now, hop at 411.32. You get there today, most likely. Why not? Why not get there today? You were already as low as 412.30. You were a point away, less than a point away. So what happens there? Because check it out. Here's what I've got. And here's what maybe Mitch can shed some light. But all of these minimums we've been looking for are now getting close to hitting, but you got to do a little more work, which says, at least 411. There's amplified, there's standard RSI, but they are not even close to an inflection yet. And then with HSI, come on. I mean, if that was going to be ideal, we would be registering oversold. These are problems here, and I'm going to get to why I have a problem with all of this. And I think I hate to do this in October, of course, and then get uber bearish at the end of October, but I need to consider this, folks. And it's something that I think is, a possibility, and we're going to know it within a few more days. That is, are we in a total return phase off of the deep crab that started last year? We've been targeting 419 forever. It's been a long time, but we've said all along 419 on the SPY, and now you're trading 413, 412.95. Remarkable. I think the hop, that's your target for the day at a minimum, but not anything there really that's going to link up here to give us what we need, even on a 4-hour time frame. I mean, this has got to hold 411. All right, and that's the only pattern you have on the daily, but this tells us a great deal of what's going on here. If we're going to be in a bigger situation, go stay on the daily. It's probably the daily's better time frame. We'll know here. You'll know right there at 411.32. Plant that number, because if we don't find any traction down here, and we don't sure as heck aren't giving any confirmation, then it is all about the weekly. And if it's all about the weekly, all right, then we're going to have to dial in the possibility of this. That's a heck of a move. So you can settle down. You don't have to jump to anything just yet. And it's going to take more than just today or tomorrow or even next week. But if we crack this, we crack 410. In the same way I said if we cracked 351 on the Qs, we're headed for something larger. And that's what this says. Let's just really quick look at one or two of the big charts. I mean, here's Microsoft weekly. It's a shark. It's a crab. There's a whole bunch of things here. But what it's not doing, it's not going up in the zone. In fact, it's getting rejected. 335 has been a clear rejection point every time. And maybe that's got to go shark to 5.0 down to 290. They are in a spot where, look, when we fall apart at these levels, then something bigger is happening. Here's Apple. Oh, not Strudel. Apple. Come on. Apple. So those are the two, Microsoft and Apple, the ones that we should be watching, because Apple as well. Remember we had a shark at 167.50? Okay, we hit that again today. Last time was an exact reaction where we're down here. We need confirmation. And look, HSI languishing, RSI hitting, amplified. But those are a few days away until that works out. So we could see target 2 on this move. All right, as low as 151 for this overshoot move. It's, and we knew that it didn't generate any confirmation when we first hit that a couple of weeks ago. We talked about it. Well, now we have it. But what is it doing? It's just kind of in a swamp, in an HSI swamp of staying oversold and extending lower and lower. Amazing. So keep an eye on those major markets. We know what the key levels for, again, Qs 336.90. Call it 337 to be nice and even. The SPY 411. And maybe we adjust that where we just say, look, if it's under 337 or under 335, or we get under 410 on the SPY, then we got some issues. Then we really are, going to have to deal with a larger breakdown scenario. So let me get Mitch in here, see if he's ready, and bring everyone else back in there. I'll look at, of course, we'll go to crypto. We'll look at Bitcoin. What's the total sum total of this move? That's what I want to see. And the other one to be looking at is Nvidia. Sure. And there's Nvidia. Look, we know there's a bat pattern here. It's going to the hop at 389. But this does not look like anything that's going to launch like the arrow suggested. We talked about why 451 was critical. It was target 2. And it came all the way back down. All right, let me bring him in. Hold on. Hey, Mitch.
How you doing, man?
All right. Everybody, Mitch Ray in the house. Give him a big
Hello.
shout out, big crash
Yo.
out,
My
s-
peoples.
slide out.
Yeah, man. This is getting interesting. Finally. All this consolidation for so long. And now we're maybe starting to see the wheels fall off a little bit, you know? I mean, completion of harmonics over the course of like a freaking year, the whole year, from the bottom, really from October to October, 78% retrace in the S&P, 88% retrace on like the Qs. But at the pattern completion zone and price reversal zone, what like would you say how many days of consolidation? You
Uh,
said it earlier.
well, I was really thinking it's a weekly time frame. I think that's probably, in terms of weeks, we're still okay. In terms of days, we're like day 70 since the top. So,
70 days since the top. And wasn't the top when they paused interest rates, ironically?
yeah, right around there. I mean,
I think it was
mistakenly.
like literally the same few days of that happening. They paused and it was over. And something interesting also is I forgot to even think about it. I remember when the yield curves like inverted and read a fact that normally it's about an 18-month laggard before like things start getting real bad. And aren't we like 18 months in now? Maybe 19
We are.
of the yield curve inversion.
Yeah. Yeah, I mean, there's a lot of things that have been lingering, I think, for a long time that everyone's been noting the conditions were ripe for that to go down and essentially set it all up for something larger to develop. But, chart wise, I'm starting to have a problem with this kind of acceleration down to target one. And again, I think the weekly is clearly in charge here. And I feel like it's a typical crab reaction that we see where, again, right off of the chart from the last year's decline in August, right to when we were in Vegas, the last year's October lows, we just did a massive spring 1618 impulse extension. And if that's impulsive, it's reactive. If it's reactive, it has to have to go through a corrective phase to minimum targets, which is like 382 minimum on the crab pattern cues, um, where it's mechanical. I mean, just purely mechanical here. So um, absolutely need to kind of now evaluate what the if that's a minimum and this thing is speeding up towards that target. We know what the harmonic levels are, and then you throw in something as simple as what everyone else is looking at, which is like a 200-day, 200-week moving average, which gets you more like 311 and 305. These could be target overshoots for this move, and then don't get me started in if something else goes down. But I think this reaction that I've really been looking for all summer long into the fall. I want to see what the character is when it hits.
305 or
You're yeah you're
uh
yeah 200 week moving average is somewhere around 310 and
200 day is 338, which is confluent with the support resistance from 2021. I mean, you're like pretty much at the next. You're like right now as I'm speaking on the cues. You're like approaching. You're at this inflection point, pretty major from 338 to 342. And if that breaks, that's where it's an easy cascade to 316 for the next swing low back from 2021 and even 2022. So I'm surprised you don't have the on the cues. I mean, I know you've got the crab, but you've got the major shark. that completed beautifully at the same time as your crab there, your smaller crab.
Yeah,
With X being November 2021.
it's a couple of different things. I mean, personally, I think if you got crab, there's the crab on the daily. I mean, the alignments work out so that yes, it could be a crab. It could be here. I think here's the shark. We do have a shark on. It's a shark. It's a crab. The shark would suggest a slightly lower target level. I'm trying to. The reason why I'm kicking off different possibilities on the settings here because of it shows the software will show the biggest pattern, so sometimes you don't see it. But crabs there on the daily and the weekly. I think, like I was saying before, same deal. Software was showing it a few things. The alignments were showing alternate bat, and there's the crab, and then even the shark that you mentioned looks like this. That's a shark right off intermediate, and that target one is 321. I mean, you have several possibilities here. I'm trying to stay conservative and just say, all right, let's take it a chunk at a time. Where I think across the board we can agree that at 336 is it's a 382 off of the low from last year's low to the recent high, and then you come back down and you get into that level of 382 is right in that area, 335, 336. Excuse me one second. So
Well, I just looked at the XLK and it's like breaking support today. Like it's right now, like as I'm speaking, breaking
XLK.
that. Yeah, just the tech sector. Um, yeah, it's the September 2021 high being broken, and that's like major. And that's also pretty much the confirmation line of the three falling peaks, which is the consolidation structure that developed at the pattern completion zone, price reversal zone of these harmonics that we're looking at. So it's so severe on the XLK. That's just aggressive distribution. QQQ, XLK, and man, I just and the XLK differential was like pretty much shark, but almost 113, right? Like made all time highs in July when they paused. Unlike the Qs, because the Qs wasn't just like concentrated with like the Magnificent Seven or whatever. And I just gotta wonder what happens when they roll over because they look like they're done, right? I mean, if you go to like Apple and like Microsoft, what was that, dude? We had earnings, and then well, you gapped up. We knew it wasn't going to be a breakaway gap, so that means the gap would probably fill in time soon, and it's already filled, like the gap today. Um, and then Google got obliterated anyway, and Apple. Look at Apple today at filling a gap officially. Jesus chimes. There's a gap from May 4th finally filling today. And Apple is breaking the 200-day simple moving average for the first time since it was below it in March, early March. And this is all happening. The most recent discernible event before all this selling was a formal bearish back test of the December 2021 high as resistance on the third peak, right? 1, 2, 3, like rule of three, breaking the confirmation line of that, like three falling peaks. It's confirmed now. It's being confirmed today. So these are like, yeah, definitely like major developments occurring on this fine Thursday in late October. And there's not much support at all for Apple, the largest market cap asset in the world, until $156 minimum. So there's still, from where we are right now on Apple, another like 6% downside, 5.8% downside. And then if that doesn't hold, then 138 after that. So this is a growth stock, right? We should be growing.
not when you're based out of China. You can't really do much
Yeah.
growth out of there.
You
Uh,
see what's happening to them. I mean, their market's in shambles.
yeah. Look, there's lots of patterns. They're just coming in to retest major support zones across the board. Here's the other thing. I didn't meant to show this when I started, but listen, the diamonds themselves, they've got a beautiful. They've done the retest. They had a beautiful crab pattern, bat pattern.
DIA.
Yeah, bat pattern. Sorry, right here. Type 1, type 2, but what we're always looking for on that retest is confirmation. And so you 332, excuse me, 329 was our return target all along, but confirmation's not there. And I would guess that this is an overshoot, get you as low as 321 on the diamonds. And I mean now, it's daily chart. You're gonna have some kind of washout capitulation down here, and then and go lower. But
Man, there's just not. Yeah, Dow Jones, like I think like below or the DIA below 332.86, 336 is like really bad. Like, that's just not a level you really want to be at for very long because I don't know. I mean, I know there are like swing lows at like 325. A couple really like one was in March 2022, December 2022, and then May 2023. But like once that breaks, there's just nothing there till like 300 or 295.
yeah, and
Like that was yeah.
I I'm I'm
Right.
I'm agreeing with that. And again, you look left, and we know we're retesting this bat pattern. We have a hop as low as 321. There's a problem that we're not even close to having any confirmation on this test just yet. It suggests something deeper, and then you kick it back and you go to last year. Look, a retest of the shark. We had a shark pattern down there, all the way back down at around 318, back from April, and to me that's an easy go. I mean that lines up with like 320, which is a swing 886, and hop level at 321. So this is not over as we make new lows for the day right now, and just remarkable. I think
All
this
day, all day. It's a route, man.
yeah, this is a route, absolutely.
Have
Um,
you like since we're talking about Dow Jones Industrial Average, have you looked at the DJT lately? Some
no,
bad stuff happening today on the Dow Jones Transportation.
whoa,
It's like a technical breakdown.
wow, look at that.
It, yeah, dude, it's like bad. It's been bad, right? But I don't think anyone's just looking at it. And it really, like, if you exclude that scam wick, it was a it was very close to a nice shark. I know it wasn't quite a 1618 on B to D or whatever, but like a 1414, but it was pretty nice W shape, completing at like, an inflection point, and it's just been no type two, just collapsing since then.
Yeah, again come back to what everyone's looking at, which is the 200 moving average, and that opens up possibilities in a window there where you're so close. You got to have the inflection to it at a minimum, and then you'll see if you really fail it. But every time you get within a stone's throw away, you're going to have that test. You're going to have to hit it, test it before you can resolve anything. And typical red October nonsense, but that's how it's playing out. And you would have to see that hit, give you some kind of turnaround inflection point. And so my main point is that you're weeks away. You're even if that did that today, tomorrow, and hit it, you're still 2 3 weeks away from actually doing an inflection and getting out of there. What we will see next week, and what seems to be shaping up right now, as with this market literally just scratching the lows for the session,
Bitcoin,
is
yeah, is also drawing down
a
at its lows.
flush. Yeah, let's jump over there really quick because that is definitely the story of the week. Bitcoin. Let's take a look here. I was looking for 37 for this thing to do it this week. But
Kind
if
of
you
hard when your equities markets are like literally. melting down.
Yeah. Well, here's a
It's
couple
just not going to happen.
possibilities. I mean, we're it was a hell of a run. I mean, beautiful big push up. We are getting that inflection. Looks like today we will generate an HSI, a bearish HSI. So, that could be the pause. Could send Bitcoin into a pause at 35, not at 37, and then come on back and build and build and build up on your trend line. My question is, do we get to that 37, 38,000 level by the end of the year? And it's all, for me, it's all about this target one off of the deep crab. So if the deep crab was at 1920K and just did an overshoot move, then the target one right there, 38,761, that's still the target. That's still objective for now. I don't, there's not, that's not going to stop. And let me see here. The weekly looks like this. Yeah, that's right around 30, 37, 38. So that's, it's one big week. The thing that I've been talking about for a while was the simple fact that this yellow dot here, that's our harmonic strength index dot. So that started literally this week. Well, it'll be valid on the close by Sunday, but we've been addressing that since this whole formation a few weeks ago. And no reason why not to think that this thing will continue to ride its 200-week moving average as well. You're above it now. But it's, forming up a pretty nice trend channel. We can go on it like this, kind of like this. Oh, how's that for pretty spot on there? Um, just ride that channel. There's your channel for Bitcoin, and you're hitting top end. So still great progress. You could have a pullback here. You could go back to median line, even back to 28 or 30 on a retest, but it's building.
Oh yeah, for sure. It's just overheated. Like on the RSI, is rivaling its highest levels ever. Right? It hit like it was above 88. I mean, my God, it was so close. I think the all-time high on the RSI, well, maybe not. Like it just was rivaling that level where if you look back historically, going back to like at least 2015, I mean, 88, 89. That's about it before a pullback, a reset of the oscillator. So you just getting really close to that level. And I mean, there really isn't even much, there's like no exhaustion on any time scales really, because it was just too violent of a move up. Because all the oscillators like reset when you get impulses like that, where it's impossible to show divergence, and so you're kind of on that first wave, and then
Hmm.
you get the small wave down, and then you'd get another big rally that would take you up after the momentum shifts back to neutral, the RSI gets out of overbought territory, then another run, and on that second run that would probably be a higher high that would take you to 37K, 38K. That's when you would probably start developing actual, real, discernible bearish divergence. So, but you're not there yet. So, and you just don't have much data, right? We look to trade during consolidation phases, right? Not impulse phases. And so certainly was a accumulation structure that developed on Bitcoin just before that fake news came out about the ETF. And I mean, that was your shot. A couple other alts had some opportunities too. But at this point, I mean, you're just, for the trader, you're either in it, you've taken some profit or whatever. You can't really do anything with Bitcoin right now as it, stands in the impulse. You're in the middle of an impulse on the daily, or any time scale.
Yep. Yeah, I mean, you're all the way up there, overextended within the channel, and I don't, that's not a biggie. I mean, that's definitely there's a lot of constructive things that are probably new within this latest move that need to be highlighted, especially you look at something like the 200-week moving average versus where it is on top of it. It is, you're not swimming underneath it like you were way back a year ago or so. You pop through, you come back, hit it again. Thrust up, come back, hit it again. So, let it do its thrust up, come back, hit it again as it stair steps its way. I don't, you're not in a moon phase. We started acceleration with this move above 32,000 for sure.
Hmm.
I'm just thinking,
That was the last time we were this overbought on the RSI, by the way.
yeah,
Like that move you just talked about.
yeah, yeah. And sometimes that what Mitch is referring to is, let me pull it up, is RSI, standard RSI, the Wells Wilder formula, 14 period, dramatically overextended at the moment, hitting there. But think of it this way, though. With a lot of these, when you get up to this kind of level, it sets up, and this one likely set up another M formation. That's what you want to see here. You want to see what I've called it, this complex structure, an M formation in the overbought, that what it leads to is a reactive retest. Like you get this formation like that. And that's what I want to see with Bitcoin do over the next, I don't know, 5 days or so, is give me an M
Hmm.
formation. And then amazingly, I mean, the March flush was incredible, that, big thrust up, but you got another incredible opportunity to get oversold. And yet again, and we've had a number of these. I mean, this has been moving quite well on standard RSI. You don't usually see instruments, in my opinion, move this dramatically on a daily chart, where you're just going overbought to oversold, overbought, oversold, but you're doing it. This one again, what I would want to see with like I said, next 5 days or so, where we resolve this overbought condition. It won't be really a time for a pause until we come out back under that 70 level. So it'll be interesting to see how this thing holds up. The key, though, for me, it's absolutely demonstrative, critical. Uh, in fact, something that I look to, where if you can crack RSI previous highs, and you certainly cracked this kind of resistance, where for the year we've been punching and punching overbought readings, and then finally we busted through again. So within the larger process, that's a good sign. That's like an early development phase, where whatever this next correction is on BTC again, it should just set up for kind of a coiling corrective move, to where once you do that and you finish that, you get another leg that continues. It's more of a pause formation, and that's what I'd be waiting on. I'd just be patient with that, wait on that, let that come to you. But recognize that, hey, BTC has really proven itself this year. Treat this year as a first step in the process to then eventually stair step our way. If we pull out and look at the long term chart, nothing really changes here. Nothing really, your building phase formation. I feel like it's shaping up a lot like 18 to 20 to 22, where you just do a general W formation. I've sketched this out before, where we're assuming a minimum eventual 1618 breakout, and as the cycle objective. Yes, it can go more than that, but just so you know, that a good way to kind of visualize how this could come together is that we're looking for a B point, within this long-term uptrend, whether it's 37,000 or 38,000 or 40. or even maybe higher, like 45. You want a B point somewhere in here. And that's what I feel like Bitcoin's trying to do. Then it'll
With
come back.
X being the all-time high.
Exactly. And then you set it up where, yeah,
So
we'll,
2019. So this is like 2019.
yeah, 2018, 2019.
Well, like 2019, the Gartley completed, and then we went on a run, and then hit a 61.8% retrace from the all-time high to that 3140 low, and then like that rally concluded, and then eventually we got the COVID crash that gave us the pretty much second test. The 200-week moving average, the kind of double bottom, it rivaled the early 2019 bottom. So is that what you're saying? Like we're looking for a golden zone retrace, which is between the 382 and the 618, and you are very close. I just can't even believe it. We didn't see it. I think 36K was the 38% retrace, and now we were like so close. $36,000 is the 382, and we got as high as like 31,100, and change. So, dang man, we were like $800 off
That's
seeing the
all right.
golden zone.
Yeah, but a lot of times when it falls just shy, it will get it eventually.
Yeah,
That's that magnet effect. Excuse me, one second, one second.
it's just like Bitcoin didn't even really hit like any. If you look at the weekly, no major levels really. I mean, 38K to 39K. It's like the major level on the weekly. Yeah, that's just what happens, man. When you got daily RSI at 88, I mean, yes, like if you're like thinking that, oh, we're just going to go higher immediately, I mean, we very well could, but just understand like that's a very overheated oscillator.
Yeah, and
And
I'm thinking it's a first thrust continuation. It continues to kind of build to the weekly segments. You want the long term to shape up like this. And we do want a B point rejection eventually. It is I think again a lot like what you're looking at here, going back to 18 or 19, where everyone thought it was dead. Then it did the big rush up move, and that was like almost that was perfect golden zone there, 618.
golden ratio, yeah.
And for me, when I saw that, I remember this is really way back here, back in there. I guess it was like 18, late 18 is really where I started taking notice, and then got in right around. I guess it was 2019. I started in earnest and caught that 20 cycle and knew that this was developing into a 1618 minimum. And again, with the kind of ratios that the crab can kick out, a 1902 overlap, for me, I was saying somewhere around that 30, maybe even 35,000 was a possibility. And that's what happened. You, probably to make it even simpler, you go to the monthly chart and you could ride that until you get a bearish monthly candle. Once you get overextended like that, you have these kind of aggressive breakaway moves where on the monthly chart, and the monthly chart for that last cycle was a good way to look at it. Your 1618 again on monthly right there was 30, roughly 30,000. Your 1902 or 2.0, those are the numbers you use with a regular crab. Were 35,000. And then finally we got the, one red candle. A lot of times all it will take when you get past a 1618 extension to say, hey, this is starting to do the turn. And that's where we are here. I'm thinking that we will do with the current projection, this current basic framework. I wouldn't want to see a 382 rejection. Those are kind of shallow crab patterns. Give me a 50 or even a 618 So
Should be
just so we
nice.
know that, yeah, the 618 would get you really close to 50,000, which would get everybody FOMOing. In my opinion, a run to 50 would be
Oh
some.
yeah, dude. You can already see it like on my stream, like when like the pump was happening from 30 to 35K. Like I had two different streams, like 1,000 people, concurrent viewers, right? And it was getting so bad, like during like from literally March to the end of September. I mean, my numbers were just like dwindling, and then just within one day, all of a sudden we're back to like normal numbers, and it's like it's just no time's gone by in this market since that move. So if you keep the price, if the price stays elevated and you resuming the uptrend for now, like yeah, man, the FOMO, you can just tell, you can see just the liquidity of comments on Twitter, right? The amount of comments and chats. What it doesn't matter what platform, you can tell it's retail seeing it, but retail's still, I think, kind of asleep here.
They are. I'm wondering, once that ETF rolls out and it's officially traded, just like the last one, that was pretty much that was the high. Here's GBTC. This is something I've been talking about for a while on your monthly chart. And again, this is a remarkable setup. And oh, let me bring on the patterns again. That would help. It's a
Yeah, let's pull
massive
back
Gartley,
today.
massive Gartley here on the monthly, and that makes me wonder, you know, on this move, and it did it on here at GBTC as well. Uh, 2961 is minimum 382 objective for this move. And what are we going to do? We're going to do another W formation like the last one. I think that was not quite 1618. And again, we could argue data feeds here, but there's a low B point on that. And that low B point usually is like is an alternate bat situation where, 113 kind of a projection, not a 1618. This one just shy. I mean, it was so close. The 1618's like that on GBTC on the first run, but not quite the same formation. I'm thinking it's, GBTC with everything here. It's as nice of a setup, a nice of a structure, that looking left down the line, like a year from now, when you're looking left, you're going to want to have that pattern behind you. We've seen it before on BTC. Again, go back to like 2018, 2020. We had a couple patterns looking left, but this is deep in the hole, but the kind of pattern where you'll make progress from that. This is a perfect example where these patterns, harmonic patterns in general, first and foremost, I call them a signpost of future price action. It would be like a head, the way you look at a Head and Shoulders first. Just because we have a Head and Shoulders doesn't mean it's an automatic opportunity, but certainly when it links up with other factors at the same levels, and you get
Hmm.
the price action, you have something there that's a stronger characteristic for the move. And then look at how this has, done nice. There's a 3 bar breakout way back in March on the monthly. Another one, continuation of June, and another one here with October. Each month thereafter, though, we did have a pause, so you got to do some consolidation on the inside of that bar. But 2961, much like the 38,000 area for the spot price, all makes sense. And again, I feel like, call it by December 31, we hit those targets.
It's interesting about GBDC. If you measure, Fibonacci from the February 2021 high to the November 2022 low, as of 2 days ago or yesterday, official 38% retrace was tested perfectly, and that's exactly where it's pulled back. So it is officially hitting the golden zone.
Yeah. with the
So nice
382.
reaction there.
Yeah. And this can walk the stair step process 382 and then maybe another corresponding 236 or 3-2 pullback, something like that. Even let's call it 236, and then from 382 up to your 50 level, and you just continue to stair step. That's not going to change. I don't think you're not looking for a massive god candle to take you to all-time new highs and then you missed it, but you definitely are stair stepping nicely in an ideal fashion that suggests we go to prior history. I'm going to suggest that we're probably more like, we're probably like more like in here. Uh, maybe not so much there, but in that kind of a phase. Or let's go back and just so you can see kind of the sequential progress. 216. What?
Dang man, that monthly. I didn't even notice like the monthly candle high close back from December 2017. You're like you breaking it this month. That's huge. Wow.
Yeah. Oh, that.
Yeah, I
But
didn't even look at the monthly. That's crazy. Such a big level that's already been smashed.
yeah, and that's listen. I think Bitcoin is probably one of the most harmonic creatures out there because it not really trading on the type of cyclical information you generally see. This is just all pure allocation, emotional allocation. I've said that
Speculation, yeah.
yeah, and the next phase is going to be the next crypto phase is again just going to be an allocation cycle. Maybe what it'll be is it'll be a safety allocation cycle where people are just going to run out of safety fears to lock
I
things
mean,
up.
that's what kind of like what we've been looking at the past 2 weeks. Like equity's looking terrible, and the flight to quality, right, as Ken Griffith would say or whatever. Gold also had been pumping too, but I mean, not many things. Like it's very interesting to see this decoupling, and then as Bitcoin's making like fresh highs on 2023, at the exact same time, the direct competitor to Bitcoin, which would just be banks or nationalized banks from '08, like Bank of America, seeing like multi-year lows, and all the banks really just looking like hot garbage, rolling over from those little bear market rallies. That only we only got a bear market rally because Jerome Powell came in and added over $500 billion to the balance sheet in March of this year in 2 weeks. And then it's crazy. I learned that in the past 30 days we have added how much debt? Like $600 billion in debt in 1 month. I can't even. That is that even like that can't be normal. And I don't know like something has to break, something has to give, and hopefully maybe what we're witnessing on Bitcoin is that this is the thing. This is the cause and effect of this debt jubilee. I don't know, man. It's
Yeah,
getting crazy.
it is. It is. Look, it's getting crazy. I I really don't know what to say about it because it is like watching, a car drive off the frickin' cliff. In my opinion,
Yeah.
it really is a it's a sad thing to watch. Being a generation older than most of you folks, we've known about this since the '90s, quite frankly, and we were freaking out when it got above a trillion, 2 trillion. They started that debt clock. It was only a couple hundred billion, maybe $500 billion debt. It's remarkable, and people are asleep. So, no matter what, I mean, it doesn't the banks they look terrible. The Bank of America
Awful.
is like Citigroup. You were right about
Yeah.
nationalized banks. There's Citigroup, and that is a correct chart, folks. That should have been gone bankrupt. The only reason why that's even still trading is because the government came in and supported it, and basically, I think they gave it to I forget who they sold it to. It wasn't J.P. Morgan. It was who they I forget who they pawned it off on. that should have went bankrupt, like Lehman Brothers and Bear Stearns, but they didn't, and they let that thing just kind of hang out to dry. This is, there's no reason why that does not eventually bleed out, and that's what it seems like. You've got here on Citigroup.
Now, Citigroup acquired bank operations of Wachovia, but
Oh,
they like they stayed as their own entity. It was literally just the like it was just let's see, the Federal Reserve. Federal regulators approved a plan to stabilize the company and forestall a further deterioration in the company's value. So it was just government.
yeah, yeah, and there's problems there. I mean, you go to even things like the strongest ones like J.P. Morgan, and we have to deal with this kind of stuff. Where's the monthly? There you go.
Oh my
The
god, dude! Like, when's the last time a lower high got put in on the monthly on J.P. Morgan?
Yeah, you're about to do a 3 bar breakdown. And I'm really big on 3 bar breakdowns. I know you do a lot of 3-day charts, and that's a great way to look at it. But this 3 bar breakdown on a close underneath 141, 140 sets this thing not only into like just a basic moving average retracement, but yes, one and two. So this is where it spreads out. If we break down here, a follow through next month on, and this has been one of the stronger ones, would say there's something seriously going on systemically. Again, that would
There's
be
a nice demand line you could draw anchoring from like the nadir of the global financial crisis, and then like November 2011. You could like draw that, and you could see like where reverting to the mean would be around 105,
yeah.
and that's significant downside potential. That's like 30% downside potential.
Here's something amazing though about going back there and why I feel like we need to start thinking about maybe something bigger on this next retest is a lot of patterns we see are very similar to what they did on in 2006, 2007. We had a tech collapse, 2001, 2002. A lot of patterns were drawn. Nice reaction, 2 3 years. Topped out at target two, and we had to do the T2. I mean, that's definition type one, type two. Sometimes it goes to target one. Other times, it can go to target two. This is the deal, though. You break the trend line and you start that rollover. There's only one possible objective, and it's because you have to retest that low. Now, that's not
Like
necessarily,
Bitcoin did in 2020.
yeah, and that's not necessarily J.P. Morgan as much as other stocks such as, well, the Qs or
Dude, I
SPY.
mean, KRE yesterday made its lowest price since May, which that was like the bottom. It even after the Federal Reserve infused 600 billion on their balance sheet, like it's still like the banks kept drawing down, and like KRE regional banks, man, that are not like backed by, like they weren't bailed out. Like you got to worry about them because they look really bad.
Something there on maybe it was XLF. Yeah, okay, we got a bat pattern right here on the
It's so
regional,
so bad looking on it. Yeah, XLF. Yeah.
but no, there's no confirmation yet. And it's not really a full type 2 on that. The obvious support here is still lower, is more like 34, come back. And, the thing that I come back to with a lot of these, it just in some cases took 2 years. Most of the stocks want to retest what happened in 2020, which tells you it was the last 2 years was fluff. A lot like
Yeah.
2006. So I'm concerned. I'm concerned that if you're getting there in a hurry, but if you continue to fall apart, like here's XLF, And this too has a high level bat pattern, retesting now, but didn't hit structural target at 30. And it's a series of lower highs here on weekly chart. I mean, that's just
Very bad on the monthly. You can tell on the monthly, it's like X, A, B, C are complete, and now we're about to start working on C to D wave. Like, and X being the COVID crash low, you know?
amazing.
Wow, breaking the 200-week moving average.
Yeah, I
It's
mean,
a big major
even a flash down, like 3 week range, busted. 1, 2, 3, right at the 200 week, and now you're making new lows on that. Where the obvious targets, are 30, 29, still 7, 8% lower to retest on this move. On this move, it's amazing. And here's the other thing.
uh,
Go ahead.
it's like what's really happening, and this is why I think like there's a high probability of way more downside. Is the price action that's occurred on this weekly chart? If you look left, you can look at January and May of 2007, the top just before the global financial crisis occurred. You can see the drawdown happened, and the sellers finally got the price back to that level in June of last year, October of last year. They confirmed a bottom, a rally ensued, and it was still like it was a slightly higher high than the previous high, but just more so like no, not even coming close to rivaling the previous highs. Way less market participants than before, and then another drawdown back to that same level these buyers are defending, and now, excuse me, you're dealing with a lower high now in July of this year than we saw in January of this year. And so it's like momentum is now shifting back to the sellers where the buyers had their opportunity. It very, very similar to like BNB in crypto, but like at that resistance. But like now you're headed back down to $30, which is that same level that's been defended since June. And the only thing that I'm taking from it is pathetic attempt from buyers articulate an argument for a major reversal to go test all-time highs, from January 2022. And I think eventually you test $30 again, it's going to break, and you're going to have a significant drawdown to like $25. So
Yeah.
that's just like, the way the price action is. It doesn't make sense. Like if $30 was truly the bottom, we would not be rolling over in July when the Fed paused and be making a significantly lower high than the high we made in January. We wouldn't be doing that right now. We would not be bearishly engulfing last week with a confirmed candle close below the 200-week simple moving average. That price action is just so bearish, man.
Yeah, and I'm thinking you're really close. You get down there, you're gonna trigger the BAM, which
Oh yeah,
gets you
that's
shoots.
that is the BAM, right? Like the
Yeah,
major high is the BAM, just about. Oh,
yeah,
it literally is.
yeah. It really. You've had enough time here. And another way. Tell me what's happening off of the
Yep, there it
inflection.
is.
30 bars to the right and 30 bars, puts you out into next year where this could just continue. And ironically, 2020 low did it as well. 30 bars. There's your 30 bar window. Sorry, right there. So that up cycle, 30 bars, and then roll over back down, done, into the next phase. So I'm with you. I think the rollover and the failure just in the last 2 months has been, I think, maybe put the nail in the coffin for this. Going into the rest of the year, it's certainly not. We don't have any major patterns. In fact, we've got a lot of things that are suggestive of a mandatory lower retest, and $30 here, definitely you got to trigger it, and you have to have confirmation as well, which none of these do. Your RSI on the bottom here, you could follow that thing and just say, all right, you've got this. Reject a test of RSI, a bump up to the 50, back down. This is a daily chart that I would need to see another retest of the oversold before I would think that has stopped anytime soon. So just a really tough spot, and the Q's almost made new lows on the day as we're speaking.
Oh God, still.
Yeah, I really think
Oh my God.
this 336.90. It's such a huge number. That for tomorrow maybe playing some puts. Let me see here. Let me pull up my, or even go Monday. Yeah, they've popped already. Been quite a move this morning.
Dude, we are at the lows. Wow.
Yeah, let me. What was it? The 336 is. Yeah, I was looking at 336. Heck, why not today? What would the let me look for today. What would the let's just say this thing is going to totally collapse. No, that's not right. Maybe tomorrow. That's been the one thing for me on the zero DTEs that the next day or 2 or 3 days out look like they've been better. I've caught some great zero moves, but they just have not been in the number that I'd like to see, or in the way that they're running, the way that I'd like them to run. It's because there's been a lot of chop up and down intraday, and with the zeros, they can move quite a bit. I don't like to sit on anything that draws down, but you do have a lot of stuff like this. Here's something maybe to look at. Getting a lot of patterns printing on the 5 minute or the 30-second chart intraday. That's tomorrow's. Uh, those are the 336s for tomorrow. I'm not saying there's an opportunity here. In fact, I'd want to see a retest back down there. But many opportunities are coming. It just taking a little more time. Here's what I had this morning: the 342s, and on the 30-second chart. Let me just up that was a good one because here you go. 332s were down here at around 16 cents. Where'd that pattern go? Hold on. Let me bring up the show again. Where was that chart? Um, oh, here it is. Well, here's the spies too. The spy, and this was I had posted this about an hour or two ago. The 412s for the spies. Just a lot of really great patterns on the puts, stuff like that. Let me look at those spies. 432, the 412s. The It's 414, 412s. Because we really want to look for those big targets to get hit like a magnet. We're so close. 411 and change is the number on the daily chart. Yeah, there it was. So where'd I have that? Yeah, right around 20 cents. A big that shark. Where'd you go? Oh, I gotta check that. Hold on. There it was. There's the shark. 5 minute shark. Beautiful. 20 cents trigger right around there, and you were at target one move. I think we could get a little pullback, and these would get eaten up by time decay. Like, let's say the market, bounces a little bit here. These could easily come back to that 42-cent move and give you another go. So don't feel like you got to chase any of this. These have given us a number of phenomenal kind of first thrust retest situations.
Isn't that
Um,
turning just into a 5-0?
yeah, that's at a 5-0 now,
Yeah.
and we still are looking for the bigger option ones, the bigger option runs still come on the retest like this for today. I'm not saying it's going to happen, but this is how I would look for it. Maybe we get a little bump, we can pull back, and then we go for the bigger move this afternoon as it drops to new lows as I'm talking
Yeah,
here.
yeah.
Oh,
My
it just
alert just went off. S
yep,
and P futures.
new low.
Oh, look at the PEJ making 52-week lows as I'm speaking to you. Hype in the chat.
Yo, what's
Leisure
going on, chat?
Entertainment's just in shambles.
Yeah. Well,
Bro, that's nasty.
yeah, I'm still gonna let this settle out. I'll give me a type two there, but those are the 12s, and maybe tomorrow, because we pretty much need to just get on the side of a complete failure. If tomorrow is another flush, close below, I'd really I'd have a lot of concerns. Even though we're October and it typically does this, you have enough here where the breakdown, the technical damage is fairly obvious.
Well,
And
it's really the price action we've been seeing since July, right? And you had a you had 83 days of development of this classic distribution structure we know as the three falling peaks, and it is now all but confirmed. It was actually confirmed yesterday with the bearish engulfing candle. The confirmation line just happened to be 420 on the SPY
hmm
or 4200 on the S&P futures, and that's all broken now. Like, so you have a confirmed distribution pattern, and it all began its development at either a 78% retrace completed a cipher, or an 88% retrace on the Nasdaq, or the Qs, whatever. So I think it's just TA respect so hard, and it's like you're starting to see some pretty good follow through and performance, and it's starting to help you understand that, like, man, these W shapes were colossal in size. I mean, starting in January 2022 and then all completing in July of 2023. You're talking about 566 days W shapes, taking time to develop and then complete. That is just so significant in size. Therefore, it could be reliable, and it turning out to be so much so, where, like, 78% retrace on the spider. Currently, since July, it's down about 9.4%. So we got like a 10%, good old fashioned 10% correction happening. It'd probably be completed today.
yeah,
I
we
mean,
just
like,
hit
you'll
the
hit the 10% mark.
we literally just hit the big number on SPY, which is was hop level, and we're down in that zone. So forget that put idea for the minute. For right now, what was the low there? 1160. Hop levels 41132. But take a look. As I said when we started here today, this was one of the two we started with. HSI, it's nowhere close to even hitting. Amplified is oversold, but like back here, expect several days to resolve. And then finally, RSI is going to come down and probably kiss it today, but you'll need a couple days. You'll need to eventually give it a full flush, inflection out. Um, just remarkable that this has been the point we have been waiting on for the whole late summer fall scenario. Now it's there. Easy way to think about it is, okay, you hit your structural level, bang. Where's the confirmation? Where does that come in? When does that come in? That's the thing to look for, and it's not there yet. It's just doing something that, if it's really bad, you're going to see a flush where it just puts a middle finger right to these levels. Um, and I will say this, much like QQQ at 350.99, because 351 was the number. I think SPY 409.99, maybe even 410.99 sets off something larger, that's at least a 200 week moving average retest 394, or we're going to do a looping big ass deep crab retest 357, because those are the only targets. Those are the uh, possibilities. You line that up, you're either going to stop here, which don't have anything there to suggest it, or 200 week. And for a harmonic perspective, that's not that's incidental. Really, the 200, any moving average really should be there to support the zone, not precede it. and then a likely target objective. How about a nice downdraft crash, if you will, into XA hop level zone? That's, to me, it seems like that is increasingly becoming the possibility, especially when you do stuff like this. And let me just clean up the rest of the lines, because now we're just looking at, like everyone else, saying, "Oh, trend line break." Everyone's looking at that. Everyone's thinking, "All right, with this week, now we're under the lows. We have a trend line break. Then, well, there's not much there underneath the weekly
You
low."
just broke the demand line.
Yep. And then what are the lineup possibilities, and all of that within, I say, a 30-week time frame that says, "Eesh, maybe what this does is it crushes it, and you go into early next year getting crushed before anything can really wash out." Um, Maybe this is a deeper thing that we need to look at seriously, because sure is acting like that at this thing keeps gapping down through the new low. That's amazing. 343. Yeah, that's amazing. 343 right now. Let me go back to the 1 minute time frame.
I think it's wonderful because it's like, I mean, the market participants wanted to see what kind of rally um, could happen, and they got it all the way up to the deepest retraces, which would be high value areas for shorts. And guess what? Who went short? Michael Burry. Like he went massively short between July and August. And where was he going short or buying his puts, whatever? He's using his financial instruments to go short at a value area at an 88% sale for short sellers, right? I mean, 78% sale for short sellers. That's Fibonacci, that's harmonics, that's complex wave structures completing. That's genius, that's the way it should be looked at. Just like if you flip the chart over, if you literally inverted the SPY, I mean, taking a long at an 886. I mean, isn't that the area? I mean, or at least a reaction would occur, and maybe you're just doing a type one right now. And but it seems like just you can see the local price action where in July you had that highest level, and then you had the attempted rally in September, concluded at the end of August, early September, and it was a perfect formal bearish back test. So that's an up thrust back test of up thrust, and those are like what I try to teach, in my streams. Are like the spring back test is one of the most powerful technical indicators you could ever identify. Huge probability of upside and huge moves in percentage change happen after spring back tests. And you got the inverse of that recently with the up thrust back test of up thrust. And you just nice to see this price action off that, because that's like, I mean, of course we all want the number go up, but like, man, if the technicals are telling you something, that's beautiful. Like the technicals in April of 2022, March 2022, it was confirmed distribution. There were two highs that were lower than the highest high. That was it. That is like the market telling you they tried once, they tried twice, and they're done. So it's time to go look for demand at much lower prices. And I think that's the same type of price action we got again just recently from July to August.
Huh. Someone's commenting, thanks, Drake, that Janet Yellen's talking about a soft landing.
Dude, so out of touch. Like, just, I mean,
Yeah.
if it's a soft landing, then that means that hyperinflation happens. I mean, just about, right? There's no out now. Like, there are no outs. It's either hyperinflation or, um, yeah, the whole everything crashes. That's your options, and they're gonna defend the currency. Well, no, they're gonna defend. I really don't like. What way are they gonna go?
I
Right
don't.
at this point, with debt so high, inflation already stupidly high. Right, like everything we consume is doubled now. Like in 2 years, doubled.
Yeah. Well, I think it's really, where is it going to break? Where's the whole thing going to break? And if it's not here, when? And I'm thinking that your larger levels, there'll be plenty of time. If we're going to have a full on break, first of all, know that the only possibility under today's lows, I would say it there at that point because we are at our targets and we're doing it in miserable fashion. There, the bigger scenario, the bigger breakdown scenario starts after today. And I've been scratching my head on this because we printed massive patterns a year ago, and they did take on a reactive kind of character off of that low, 357 to 460. We also know the fact that it was pretty much done by about seven stocks, and the
Pathetic.
rest of the market, more than 50% are negative on the year. And so if that's the case, then you forget about 400 whatever. And that's actually works to your advantage where the the larger breakdown once it triggers, which is you could argue, yeah, it's this week, you get it in an acceleration move. You get it where maybe this took 20 bars, the next one does it in 10. And then we find ourselves, you know, this is the thought. If, and it's not that big of an if, but if we do this breakdown, spies under 410 anything, the Qs are under 336, then that opens up larger possibilities. But the thing that gets me on if it's a monthly, quarterly, or even annual, you have to be thinking about what these candles will look like come December. That you've got, first of all, you're printing a lot of red candles on a quarterly chart, which is not a terrible deal. It just typically when you do that, you're not gonna see any kind of immediate recovery. And if anything, it's reminding me of 2002, not even so much 2008. It's more like 2002, where this is your range for quite some time. Where'd you go? Get over here. So your range becomes something like this going forward at least a year or two. And you come back, you got to retest the bottom end of that range. You go back to 2002, a lot like 2004 to 2006 or 7. That means it was fluff. And if that's fluff, then we got to pay for something here. And it's doing it in a way where you're maybe a month away. You break down under, what was that, the last quarter, the second quarter low. Yeah, under 403 is, these are the things where you start to do real technical damage on the long term chart. The other thought that I had, it's like a 6 month or even an annual, depending on how we shape up for the year. You could have one of the nastiest long term, let's do the annual candle that we've seen in decades. Imagine if, here's the thought process. We were way up. SPY was up, nice, healthy. NASDAQ was up big. If we go red on the SPY for the year and then take out last year's low like this, and let's say we do that next year. This year we have if it's inside or a red candle, that would be a real problem. And then eventually for next year, you take out 350. Just so you know, these are everybody's looking at these targets. I don't think anyone really should be surprised that your long-term consolidation up here could take you as low as pretty much 375. Retest the lower end of these candles with the 2022 low. Yeah, it's 22 within the whole uptrend. That's your absolute pivot point, and if not, then you're going to go into something longer, larger. Uh, the the price levels I think are stupid clear, really stupid clear. That it's going to be a mechanical move that you take out. Yeah, it's lining up for 410, 405. certainly 399 on the SPY. You shoot another 10% down, in my opinion, maybe 20, and you get this nasty full on retest of 2022, or God forbid, the whole 2020 range, because that's there you go. We got patterns. I mean, this has been the guiding structure for the last year and a half, 2 years, and still is. It's just instead of it being, gauging how far this can go to looking left, now you're on a return phase, and this is where, in my opinion, you can get some of your fastest setups that come on back. That have to do it in a mechanical fashion. So just I'm going to show you a couple of the big caps that all have this phenomenon, and the Tesla, I think, is pretty much poster child for not only a major bullish pattern, but we have a bearish pattern there, and its XA level retest that bat pattern puts you way back at 127, or the big one that I've talked about.
Oof.
Uh,
It's lower highs, man. So many lower highs.
yeah, here's Amazon. So I've been talking about 119 to my crew for a while because it's a weekly bat pattern. We hit it today. 119.87. We hit it. Software is designating T1 dollar sign on the weekly, but you pick it out and go to where we are. We're oversold now. Nothing on RSI amplified, but this is just hitting that you probably take 2 or 3 more weeks. So, not where you want to see it, with hoping that that's some kind of reactive bounce. No, it's a first step. And the obvious downside objective to retest would be back at 93. And it's kind of making sense, not only for the pattern perspective, but the 200 week. I don't know, you do probably a lot more work with
Yeah, below that.
that kind of stuff, but you
Like tested twice and pretty much failed the 200
exactly.
week, So bad.
Yeah, tested twice there. You're under the really the this dark side here underneath that 200 week, and all of the obvious levels still lower
Yeah.
there.
Well, it's
Um,
just like you confirmed. See those supports back from 2020. They were support, and they pretty much flipped to resistance twice. That is like confirmed. With this harmonic completing so bad. Yeah, just extend out your rectangle.
yeah,
Yeah, that's like the worst, man. That's like terrible. Like that's like the buyers had their chance. They've now shown us that they're just like just far less of them than before with confirmation. So it's like, all right, time for them to relent and for the free market to find, uh, demand at lower prices.
yeah,
One
yes,
one chart at some point you should look at just because it's interesting is the RSP, which is the S&P 500 equal weighted ETF, right? Everything on the S&P, it like it takes out that insane uh, record breadth, between the 7 and the 493,
there you go.
kind of like paints a different picture.
Still a type 1. I mean, on the weekly, getting stretched out nicely, but target 1 is still 121. And
Yikes!
yeah, this is how we know. This is how we know, literally in the next 2 sessions, 3 sessions tops. A lot of these hitting critical levels. The spies there on it, just on SPY. This is RSP, as Mitch said. So you get the follow through in the next week. That's how you crack it. Right on the daily, there you go. You got a bat there. You're retesting crab pattern there, but that's a first kind of step. There's the T2 is getting generated at least by the software that says, okay, that's automatic type 2. But again, that sets up the zone. That sets up where you start looking to the right from here and then say, all right, where's confirmation in here? In that window, this could be any chart, and it's no HSI, standard RSI, or amplified is still oversold, and then standard RSI, that needs a test too. Um, uh, Nothing there yet, not yet, and could come as low as 132 on that move. Amazing though that this thing, that little pop it did, you go back to just October, the beginning of the month. That was a real telling reaction, and then the reaction got completely rejected. This is the
Just
rejection of
less than
this.
before, less people than before involved with the asset
Yeah,
distribution.
and that says that that last little bump was just a reaction, which is pretty meaningless now. And how low can we go in the zone? And there's nothing there. You could even sit back and say, all right, if I wanted to be bullish, where I would need a 3 bar breakout, or I need a 3 bar range to resolve that. You're not even 3 bars into this post that terminal, that T2 level, to where it would matter. Not only that, making a new low. I mean, making a new low on this move for the year is just puts you in a bad spot for.
Did you see the 200-week simple moving average? Like when you were on the weekly, I didn't see it on your chart, even though I know you have your 200 up. Like it's so bad. Like what's happening like this week alone?
Yeah,
You saw that weekly
yeah. There you go.
200, just breaking it, and it's 1 day 3 hours till it's confirmed below the 200-week simple moving average for the first time since June of 2020. And at that point, the V shape had already begun. That's like just brutal. And bearish engulfing candle last week is getting the follow through this week. So significant. And you're talking about, hey, welcome to 52-week lows today. If you go with the candle close, because it's the lowest candle close I think since October 25th, 2022.
Yeah,
If all stays the same or lower.
and it's a little bit different than 2022 because you kissed the 200 week, and you responded and
Yep.
did had a nice 1 bar, and then the following week a 3 bar breakout. Here you come to it, and then you just gap down through it with what we're seeing here. Uh, that's different. That's not like a quick test. That's a penetration, and I would need to see this thing just wash out. It's amplified back then of a successful test, managed to kiss it and go. Where we are now, and where we are on a lot of these is just swimming deep in oversold conditions that continue to expand. So when you do that day over day, there's nothing to jump in front of until that could at least turn around. My thought, and I've said this to my folks for a while, historically, if you're going to make lows or an inflection is a better way in October, it's confirmed in November. So let's see how this shapes up into November, because if the breakdown's going to come, it'll come and it'll happen throughout into November, and it'll just eviscerate the gains from the beginning of the year. And I keep coming back to this whole point that if the big move from this year was just a reaction, which I'm kind of thinking it really was, that this
Yeah,
move
I
on the
agree.
SPY is just, you go from a year ago to there. That's just a simple, I don't know, really, if
It's like
that.
a more significant version of what happened in February and April of 2022, right? After you'd made the highest high, you then had a drawdown, and then you just confirmed distribution. Like you were talking about the 200-week moving average on the RSP, where the first time big bounce, and then now we're breaking it, and it's like, but you didn't discuss what happened in between these two levels you talked about. All that happened was confirmed distribution, confirmed failure to rival the all-time high or even the high from March of 2022. So I mean that's like price action telling you literally they can't hide it, you know? Like these big boys cannot hide what they're doing when you are able to identify what a swing high represents. And they are just representing to me at least that a failure to break 152 confirmed, and now it's time to flush and test the lows from October of last year, but eventually break them, and then we could see finally maybe a back test of 118.50, and then you could get yourself a good old fashioned bat pattern. I mean that might be maybe that would never happen because there'd be too much support at 108, but an 886 on the RSP would be like $88 probably.
Let me look at that. Bring RSP back up. That's an interesting chart. I haven't seen that, but it's a great way to look at it. Kind of reminds me, friend of mine, Paul Desmond. He's passed on since a few years ago, but he's really a TA legend, and he wrote um, some great work, and he did a lot of research on operating earnings, and that's what this reminds me of, at least the equal weighted ETF, to get the real kind of underlying nature of what's going on, because uh, yeah, I think the thing people probably haven't talked about enough is the simple fact that the gains this year have been concentrated in those top seven, and easily can give those back. Give it back, and let Nvidia come back to 300. Let Microsoft, Meta. They didn't do it. They didn't. Meta's.
They tried, yeah. The buyers attempted. That was this whole purpose was the attempt from market participants just to make sure it was real, like that high we saw in January 2022. Just had to make sure, and now we know far less than before. The Bogdanovs died, whatever. I mean, Fed presidents and Fed executives are banned from trading stocks. At the same time, the market totally topped out. Right now, it is confirmed they're done. I think, like, at least. But whatever. Money printer could go burr. But again, like the money printer going burr got us in the situation to begin with. But now, the looming after effect is super inflation, and it's not stopping. Like home prices are like frozen for the most part, but like they're not going down. Lack of supply, people are locked in at their 3% interest rates. So and then all the consumer stuff, right? Like what you eat, you go out, you want service provided for you, anything like that. All of that's doubled plus in price. So
You forget
to
about
cut
that.
interest rates
I mean,
would
forget
be.
about. I don't know. Did you make it out to the steakhouse for your birthday last week?
Yeah, I ended up going to Poppy's instead of Poppy Steak instead of Smith and Walensky, but
I,
nevertheless, it was incredible.
I was thinking that when I took the first time we all got together, we went out as a group, and I picked up that tab, and I think about it that now, what that would cost.
Oh man,
Probably be like,
jeez.
I dropped like 1,200 that night. I got to think, what do we had like eight or nine
We to
people
be like 2,400 probably now.
easily, easily.
Yeah. Yep.
And that
And
was,
it's like,
and that's not going to change. I mean,
yeah. And so like all you could, I've said we're traders now, not even to make money. We're like traders now to just like outrun the super inflation that is occurring that they will never formally or officially tell you, right? They're just not going to do that. But it's happening. I mean, but like they lie about just about everything. So why would they be telling the truth this time? I mean, you got like senile old women, right? Like yelling, telling you soft landing, or there will not be a financial crisis in our time, or we can fund multiple wars overseas when we have $33 trillion in debt. These people are like they have betrayed us. They're treasonous.
yeah,
I just can't believe, and I think they just have the audacity because they know no one will do anything. They know the mainstream media is completely infiltrated by their own crony people, right? So they will be protected, and anyone who attacks them will be their character will be assassinated, as you see, right? Anyone trying to come across them, the whole system destroys those people. So like they're just so emboldened now because they know no one's going to do anything about it, and it's even worse in Europe. It's bad in America, but it's like terrible in other countries. And it's just like this whole politics, I mean, these bad decisions, because these people in power, we're now seeing the cause and effect of it, printing all this money, and like I don't even know, if we start drawing down rapidly, you've got boomers, right? I mean, is it like 10,000 are retiring or dying daily, boomers, and they hold like 77% of all the world's wealth. I mean, what happens when they're getting so old now that they need that to like live, and the cost of living so high, and everything they own or they're trying to buy now is so expensive. They just like say, you know what, equity is not good, buying T bonds or my God, treasury notes, and I'm just exiting the equities market. I'm just not going to return. Like you just got to wonder, when is that starts a death spiral for equities, and then the Fed has to come in with interest rates so high as they are and super inflation ongoing, and then they print more money, and then it's like, then what happens? Like we're at this point where there's no winning. Like it's so bad now. At least in '08, they could lower the interest rates to zero, and there wasn't like crazy super inflation ongoing.
Listen, we haven't seen this since the 70s, and most of you folks were not alive. And
Yep.
I do remember the 70s as a young kid being challenging for most people. My dad was an accountant, so that's a good line of work to be in where he managed to get through. But I remember, even us as a family, my folks really kind of pulled themselves out of with their bootstraps of, making their own way. My parents didn't have any money when they started, and I remember those challenging times. And I've said this before, even as a young kid, I had a little bank account, saved money, and we'd get 8 to 10% on a passbook savings account, and that's when rates in the early 80s they went up to like 16%. And that's what we need to figure out, if that's what's coming down the pike, and this is the big chart I wanted to show everybody. This is an amazing all-time bat pattern on going back to the 10-year yield quarterly chart. And again, folks, the pattern that's shown here automatically generated, and it's, um, in my opinion, I since we've designed the program and we get these kind of massive patterns, that's a quarterly chart. We got to respect not only the fact that, look, all the way down to the hop level, right at 1%, it held. We generated some confirmation that, look, target one on here is 8%. And that's on the 10-year yield. And I think that is definitely a possibility. At least you get up to, 5.5, almost 6%, where you got that 200 moving average as well. There's nothing here yet that's going to slow that down. And again, these guys are going to. I agree with Mitch.
Wouldn't
They're going to
wouldn't it slow
continue to
down
buy.
though? It wouldn't it slow down though if like we get a waterfall like crash on the equities market? Wouldn't like that's the panic that would cause them to, they've already paused. So now all we need are a few circuit breakers to trigger, right?
I would
I mean, and then the money printer would print again, and then they would defend that, right? I mean, they would defend the market.
I would think it would come after. I would think that you first crash, then you cut. First crash, then cut, and then the crash would actually be that first kind of shot across the bow, and then they'd have to cut if they're able to cut, because really
Exactly.
what I feel like's going on here is, like you said when you started, that we've added something like crazy, like 600 billion to
In
the
1 month,
in 1 month.
30 days, dude.
If the other party was doing that, they'd probably go have them arrested. And
Dude, it's uncapped spending until 2025. Uncapped.
yeah,
That McCarthy, like that guy literally destroyed us. Like, I mean, you got one side that's like trying to toe the line, like, because you have one party that just cannot stop spending. And I know Trump was spending kind of like crazy too, but like, hey man, the COVID virus, and now you have a new administration in power that is like, oh, because he did it during the COVID lockdown, we're gonna do it, and now we're taking it to another level where there's not even a cap.
Yeah.
I just it's absolutely insane. So I knew it was going to be like 6 to 8 trillion was going to be put on the deficit. But now, like I think it seems like it could be 15 trillion by 2025. And you think that's crazy now? Just wait, man.
Yeah. How about gold? Because I think gold is. I was looking at that last week. Um, it's in an interesting spot there. I think the next we can get one more retest here. They're trying to knock it down. Let me. I think GLD was the big pattern setting up. Um, oh, let me get there. You go. It's a Gartley here. So GLD,
Those gaps.
yeah, GLD printing really nice patterns on the daily, and I think the way you survive that, or if we're really going to have something that ferocious, then you're going to get your massive breakout on gold index where you finally resolve this 2000 consolidation. And I've been saying this all along that the big acceleration, big breakout for GLD comes above 190, 195, and it sets up for a 1618 breakout on the weekly. So, you're going to stair step all the way up until you get there. But if you're looking for the massive move in gold, it's like that. It's above, really above 195, above 200. Here's the spot price, which I think is, just getting held down artificially. It's kind of
Oh yeah, it's terrible. And it's like then it's
ridiculous.
like a what a $15 trillion asset too. So it's like, oh, the amount of money needed anyway for these moves to happen. It's just like why gold when there's Bitcoin? It's insane.
Yeah, and
IMO.
well, I think you're getting that. You're getting the obvious flight to safety with Bitcoin because people are like, screw it. It works as a vehicle. And if I know nobody can mess with it, and the other people are just holding it, anticipating the continued financial fiscal policies that got us there. And you got guys like Sailor and other ones and the ETF to come where that money's not going to leave. That money is permanent money in the same way the GLD got allocated, and the GLD was, came in around gold 400. That's how you get just this allocation. And again, crypto is just allocation. I know everyone wants to cite, use case scenarios, whatever. No, it's an asset allocation cycle that's coming because the other alternatives are declining, facing a lot of challenges that Bitcoin won't. So more people will have cash that they won't want to go into bonds because they know potential for real net return is like zilch in
And it's like
inflation.
the mentality of it is like it's crazy, right? You buy bonds because like you actually trust the government. We're at a point now where like I literally think they have completely betrayed us and they are destroying the current system so they can implement their own like totalitarian government with and it's all a digital dystopic future. Like in Europe, like Lagarde, like they're doing it. They're unveiling the central bank digital currency. So it's like what you want to give those people that are spending us into oblivion to where they're destroying everything that our forefathers and the people that died in World War II, everything they all fought for, they're now destroying that for their own reasons, right? And why would you want to give them a loan? Like to me, it's almost like a fundamental thing. It was like I don't want to buy AT&T because like CNN and like the I think these people in media are have started all these wars in the past 20, 30 years, right? So I hate the media. So like in good conscience, how could I ever want to even put money in it because it might be going up? I could find something else that's not like selling out humanity. I could put my money into it. So it's like it becomes this fundamental thing. Like you really want to give the government your money? They're destroying your wealth. They're destroying everything at this point.
Yeah.
So anyway, sorry. Just
No, I look. I am as angry. as you about it. The disappointment has been, for me, it's been longer than that, and I've really been. The financial crisis to me was the biggest sham. 2008, that was a sham and a half, and then the way that they bailed out of it was
Hmm.
just that's where they went hyper psycho, quite frankly. And there's AT&T, go woke, go broke, because that's definitely what they've done. But whatever the narrative, technically, you look at something like that and you say, that's not the kind of asset, that's not pointing in the right direction. I don't care how high their dividend yield is, it's all getting
Yep.
financed by, worthless debt that they're going to have to refund. And that, uh, statistically and just mechanically, how kind of the lag happens with refinancing and then the real rate effect, it is a lag. It is an 18-month, 2-year lag. You saw that in 2007, where rates popped pretty hard, but it was still kind of an 18-month lag before the major breakdown. And you go back to 2008. This is what I'm thinking, and we'll just use AT&T as the example here of having this kind of a very similar kind of corrective off the low phase, maybe not as dramatic since 2020, but this could be the Dow, this could be S&P, whatever. You come down to the 382, all right, which is right there, and then come back and then fail. And that's where you get the flush down. And listen, from a harmonic pattern perspective, it's a BAM phenomenon. And that's what seems to be starting to shape up that to come. I mean, we haven't. This is a first thrust down to target one across the board. But if we're not going to get any confirmation and this thing's going to continue to lag, it's going to be that next phase where we get the acceleration. Could happen pretty quickly. And everyone talks about the financial crisis, as if it could never happen again. Well, we're seeing that
You
pattern
have leaders that
breakdown.
are saying that. They're gaslighting. They're telling you that.
Yeah,
Yellen says that that's like it can't happen. It won't happen. Who is she? Like, I mean, that's those are the normies are going to listen. Oh, that old decrepit lady that's so out of touch with reality. Saying that we can fight wars, we can keep printing money, everything's fine. Oh, okay, then we're just gonna listen to her. Keep buying Taylor Swift concert tickets. Great.
yeah, 2000 a pop. I don't know why, but you have
Oh,
this.
such a joke, dude. Stupid
You have
consumers.
Yeah, you have this. I mean, 2007, they were able to run it just above the nominal high, but this is the kind of thing we want to watch for. 382, whatever, wherever that is. You know, you're looking for this from a Fibonacci spread, harmonic spread of levels that it looks ugly right now. But what we know goes down is once you take out the 382, your acceleration to do a full BAM, bad action magnet move reset happens after the fact. I mean, you do something like that, which it did 2000 and 2007, 2008, and we get this kind of downdraft, which is to me, is this going to be the 2024 first half of 2024? And we had W in there at the time who was just like, I'm out of here, guys. So I really don't care what happens, and then just left it in shambles to take over for the next administration. And this uniparty could be doing that. In my opinion, it's look, you're here, you're failing, you've spent enough time up here, your your breakdown for this, the acceleration part, that's minimum on diamonds. That's why where we are now in the next week so critical for the longer term possibilities against the backdrop of everything we know. I do think it's a lot like 2007. You have a lot of similarities, major hot wars in the Middle East. In this case, we got Ukraine too. So it's amazing how people have kind of not.
Soon Taiwan, and soon Iran. Okay, these warmongers, they're just going to do what they want. They will not do what American citizens don't want them to do. They will do what they want. and there's always an agenda behind it. It's crazy. That's what I'm saying. Like these people are not in our government do not represent us anymore in any way, in any capacity.
Yeah. Yeah, and the only thing we can do is, be defensive, protect yourself, your family, stay the heck out of debt. Watch what you're spending, allocating. Everyone else is living on a deficit spending, even the government style life. For the folks that are here, that attend Mitch's stuff, that attend my sessions, we're looking at the charts for the signals, for the plan, for the future. Because I remember back in 2007, 2008, people said to me, I never want to talk about the stock market ever again. People got burned. Yeah, same way with 2002. It just, people were
Yeah.
so burned. And we're going to have to revisit that time, in my opinion, where people are hurting on a level where that defines the emotional kind of traumatic low. And
You know what's hilarious?
what's that?
You say all this, and it's like that has already happened in crypto. Like we
Yeah.
we like just went through all that, and now it's like we bottomed. Like just it's insane. Anyway, sorry, I didn't mean to interrupt, but like it's just funny.
Yeah, and I don't look. Crypto will be a feast famine situation. I think it'll, Bitcoin has got to lead it, and Bitcoin did finally start what it needed to do to get out of, to get out of the hole and bring money back to the space. But I don't think it's going to be, a throw dart situation like it was 2020. I think you'll be focused on your top market cap style picks, Bitcoin, XRP, maybe Cardano, maybe Ethereum, maybe a few others. But that's aside from maybe even the top 50 being a possible candidates. I think you need to get into some lean times before this thing is an opportunity. And what I'm concerned about is that, look, this year's low or last year's low and what happened this year in retrospect might only be a simple reaction. And on monthly charts, we just close where we are today for the diamonds. You have your first 3 bar breakdown on the monthly since you go back to 2021, and that usually sets it off. It's usually only takes that 1 bar to then establish the range that,
Looks like three black crows as well.
yeah, that obvious retest here. But if this is an X, A, B, C, D, M shaped pattern, well, 886 is a heck of a lot lower. That's my concern, is that something, if we see rates spike, if we see diamonds fall apart, then we know that the first 6 months was lame reaction. And if that's a reaction, we have to retest the starting point. And if we have to retest starting point, larger possibilities sit there. You go to, hey, I'm looking at the monthly. Is there anything there that suggests we're anywhere close to getting oversold? No, no,
No.
not on monthly.
Yeah, and you can go through and you can like I have a watch list for like all the Dow Jones Industrial like big stocks, and man, you look at like J&J, like today, like I'm like 1 hour 40 minutes. It'll be the lowest daily candle close since December of 2020. Right? I mean, we're
Mm,
talking multi-year lows. Coca-Cola, caught a little, V shape off the lows, but guess what, man? Like that you're talking about a bear market rally short squeeze that will inevitably end up putting in a lower high than the high we saw in July. Apple, we've already talked about that one, how bad it is now. Nike is in a very well established bear trend. Just reacted off a bat completing and now is back tested 105 as resistance and is rolling over today down at 3% plus, or about to be 3%. Mike, dude, I'm just like looking through here and just like everything's bad. Like Goldman Sachs, is also in the Dow Jones, and Yet just yesterday made its lowest daily candle close since
Hmm.
October of 2022. So 52-week lows yesterday, and rivaling that price today. And all that coming off of like a bunch of failed attempts to rival previous highs. Yeah, Walgreens is also in the Dow Jones, and yeah, well, aren't they the one that's gone bankrupt or going bankrupt?
I don't think it was Rite
Just
Aid, but
sitting.
they're probably
Oh
due.
yeah, yeah, dude. I mean, they're like what? Like, last time I checked, they don't let people. They let people steal too. Just like all these big stores, they're just like, yeah, we don't care, whatever. People can just steal from us because the people in charge of the government would prosecute the people defending themselves or defending the property. But yeah, Walgreens is sitting out of
Which,
support. I mean, just pretty much near its
yeah, you go
lowest
back.
level since '09.
Yeah, that's incredible. And that's like AT&T. That's like Verizon. These things are they've been in a pretty treacherous downtrend. Yeah, there's Verizon, and it's 34 currently. Look, go back. That would be amazing for these to come all the way back to 2008. This is my there you go. So this is a really good example of what my concerns are. If the Dow, if the SPY, if these are all going to be reactive moves, if it's from 2008 or 2020, there are long-term consequences that you have to deal with, and that one, the Verizon is ugly. Walgreens is worse, but Verizon, that was a safe stock for decades. Yeah. Oh, yeah.
Yeah,
Don't sell my Verizon. Uh, no
dividend bros.
dividend. Yeah. Well, what happens with these dividends is once rates really spike, the dividend doesn't matter. I mean that's a part of the issue.
No, it's like staking with S coins. Like, oh, dude, I got my staking. It's like, yeah, but you notice the asset you have to own is down 99%, right? It doesn't matter if you're staking. You're a loser, right? Same with these. Yeah, dividend. They're paying me to own their trash asset that loses always.
Yeah, there's Wells Fargo. I mean, the banks don't look good at all. The banks look the fact that you have not. I mean, not only that the recent breakdown, but you had this failed high, which is a consistent thing across the board on a lot of the banks that you challenged the decade high, quite frankly, and you failed. And you failed, and
Mm-hmm.
you have nothing here. Your 382 level. This is okay. We found a couple of good examples of what I think is shaping up, but even with Wells Fargo. Like, let's say you were thinking this is going to be a major trend continuation. Well, if it's going to do that, you don't violate a 382. You long term, whatever your longer term trend is or longer term time frame, when you just slice through a 382, which is kind of what I'm thinking could happen here on the cues of the SPY. You slice through that 382, you're gonna have to do more time. You have to do more damage, and that's where this thing is just remarkable. It seems to be shaping up, and then you've got stuff like your caterpillars. Was that monthly, quarterly, even? I mean, where's the weekly on this one? This one seems like it was just starting to set up here. Where's the crab?
Oh, it's
Uh,
no so nasty.
yeah,
Yep, back below. I mean, it's like imagine owning Caterpillar from May of 2021 to now. Maybe dividends, okay, but beyond dividends, you've made nothing. You've literally lost money.
yeah. A lot of these
Such a
doing that.
failure.
Where's what was the other one that I thought was Home Depot or Lowe's? So Home Depot and Lowe's, these were big favorites
Looking bad.
forever. That's just a nasty breakdown the last 2 weeks. This week pretty much seals the deal, or you could say that was last week. And you're going back a decade on Home Depot. I mean, or more. So your major challenge of this 200 week moving
Oh my
average,
god, it's so bad.
and
There's three failed attempts from buyers to rally to higher prices. Three failures. Like it's time to relent. It's time for them to back. I said we need to find some demand somewhere else on this chart.
here's Lowe's. Okay, I
So
guess
awful.
no one's going to be remodeling houses at 10%, 12% rates. Um,
That's all they can do because they're all stuck with their 3% mortgage rates, right? They're just in their homes, and what do I do? You just say, whatever.
well, you stay in the real estate. I mean, I look, you have a real problem with real estate, and it's really coming to head in terms of lack of supply, inability. Anybody that has real estate is not selling it. Anybody that wants real estate and they have to borrow money, they're
Can't
probably
get financing.
exactly.
Yeah, I got a property for sale in an incredible neighborhood. It was like my first home. I can't sell it because no, like it's not like there's no demand. There is demand, a lot like showings and all that, open houses. But like what I'm finding out is like the people that are applying for loans, like the bank won't give them the money like that they need. They can't get approval for the amount that it's worth of the house. It's insane.
Yeah, I believe it. I've been holding off myself, and I probably the last couple of years been looking to do a move, and I think I'm gonna have to just be patient on it. Maybe 2024, 2025, just because I do think that if we get a correction on in real estate, that would be the opportunity. But right now, no, we haven't seen it price itself out yet. So um, I want to show everybody one or two things happening right now as we go into the close here. It's 2:15. 2:30 almost. I'm gonna wrap it up. Check out
Yeah,
some of
get up.
the spy put options setting up for today. So if market is bounced a little bit, yippee. But if I'm looking for end of the day rollover, here's some interesting puts. And again, that 411 area on the SPY is huge. Here we have a type 2 on this is a 0 DTE. So this would be it's still early, but I'm looking for some confirmation and I'll go over to the SPY underlying. But you're back down here right around 20 cents trying to stabilize. It's a type 2 off of that structure. And let's go to the Qs because I was showing the Q 342s, looking for that, and look what they came back. And on the 30-second chart, so they did come back. This is where we started today. I was saying, hey, now let's get the setup. Oh, and look, so pretty interesting. You see how active these things can move. That would probably pretty much be the play. We get a rollover. You got earnings tonight. Can't imagine that's going to be good. Who was it? Intel, someone else tonight.
Well, it
Uh,
can be good, and you can get a 10% pop, but as we've seen with Microsoft, that will be taken out within a day or two. They just
did that
it's
roll
all
over?
Rudy poo. Yeah, go to the Microsoft chart and look at what happened. It's insane. I mean, it makes a lot of sense because
328.
if you know
Oh,
about
look at
gap,
that.
yeah, the gap, it's the gap, and then like went up, gapped up to do what? It hit a major resistance at 344, which was the look where it was. It was the high from December of 2021. The candle, it was literally an inflection point from November and December 2021. That's all that happened. You went up, formally back tested it, and now look at you. It's right where you were before earnings.
And
And
that's a
now
nasty
with the
candle.
and the fear is, you think about like the high from September and now the high from October. That's twice now. So that's buyers confirming that there are far less of them involved than what you saw in July when the Fed paused interest rates, ironically. So it could be the confirmation distribution and the bearish back test you're looking for.
Where's
But
weekly?
what a run it's been on.
Here's the weekly, and you do have
We
look at that. So that's back to back, and this is my concern here. 344.08. That's what it was, Mitch. It's the 1618. Had to go back there one more time. What was that? 346 was the high. So three. Look, it's all about last year's 1618. The downdraft move. This is definition of harmonic impulse wave. I harmonic impulse wave. That has a crab pattern too, but the nature of it, I talk about it in my volume 2 book. It's a short-lived reaction that has to go through usually 382, maybe as much as a 5-0, kind of a shark to 5-0, and you have both the shark and the 5-0 there. That Microsoft, look, we roll here and you break down, nothing there. I mean, there's just nothing oversold. That I think 300 is an easy way to go, and that's probably the strongest or one of the top five, relatively speaking, of the whole market. And we do have structures down here back in 2022, a year ago, that if I was saying that was a 5 minute chart, well, I'd say, yeah, why not a looping retest all the way back down? That's what's at stake. And that's why this monthly close on Tuesday, see what that does, and even the rest of the market. What are we going to do when we hit these levels? The 336 level on the Qs, or we're there on the SPY at 311. We fail 311, in my opinion. That's the trigger that sends it down. So it's, where are we now? Qs are 345. Nice little hop, but let me just come back to there and we'll wrap up on the Qs. Um, 3 bar breakdown on there's a monthly QQQ chart, and that's the definition of what I'm talking about. So we're certainly going to close this month. You're 351.30. So just keep that in mind. By Tuesday, we generate a 3 bar close, a 3 bar breakdown. That should start it. I mean, that really should begin. So we'll come back on Tuesday and we'll check that out, because the acceleration typically starts after the fact. I mean, it's you
Man,
get.
look at that inverted hammer reversal though with fall through. That's it. That's GG no re. Like that's a perfect inverted hammer. Or I'm sorry, a hanging man, which is the inverse of the inverted hammer.
Yep.
That's a hanging man reversal. So bad on the monthly.
Yeah, and enough time's gone down too that if we talked about, and I've discussed, your 886 is right there, retesting the all-time high. If that's a rejection, which I agree it is, enough time has passed now on a monthly chart where you've already started it. So follow Microsoft, follow, let me go Apple on this chart, because Apple's much the same deal with major patterns down there on a weekly. There's a monthly. Here's the weekly for Apple. And you got, I mean, there's a lot of stuff here. Where'd it go? Hold on, let me pull this up. Maybe I'll go patterns deselected. Let me check. No, I don't. That's all right. It was a weekly on Apple.
Hmm.
But fundamentally, here's the things to look for. Obviously, these are all setting up with major structures, possible things that have to be retested, and it wouldn't be a stretch. It's just a mechanical long-term reaction that has to go down. And here we go. That's the move. There's the crab pattern. And like I said, even if this was a 5 minute chart, 167.62, that's the minimum. Where's confirmation going to play out? And so Apple, not only that factor, but we have a lot of things back down at the 130 level that, again, if this is reaction, then the type of pullback that we have to do here only speaks to more downside for now, until I could get a definitive oversold reading, which we don't have. We're still there doing the work. I would love to see RSI maybe next week get into that oversold area. So 3 or 4 days, and I think that points us to where we come next Wednesday or next Thursday. I think it's going to be clear of what this thing wants to do, longer term, and that would be like a first kind of trigger type of deal. So let's see. We're 345 right now on the cues. It's trying to rally a little bit. Let me see here.
Yep.
At least maybe.
Everything's coming off the lows a little bit. But wait till power hour,
Yeah.
25 minutes.
Um. Yeah. There's the 5 minute. Let me go to extended hours. Usually better data. Yeah, cues are just that's just a quick pop, and we've every swing retracement has been uh, pretty much a dump. You know, you come down here, you do an intraday 618, something like that. You have your 200 moving average there, right there. Maybe you go as high as 347 and then back down. Just this is a really nothing to sneeze at, but uh,
Yeah, joke rally.
I just think with the speed that this is coming in, you have to look at this at least for larger damage. And again, I come back. I typically look at things that most people look at, like that 200 moving average. That everyone's going to target for there, and we get there and we do damage. We know we still have more to go, but it's what happens at those levels for the Qs. Like I've been saying, 336. It'll show us if this is going to be a real devastation or not. It's when we get to that point, and Spy, in my opinion, is almost there. That you start bleeding this down into next week. That's your key more than anything else. Is I think Spy because it's closer than the others. So we'll come back to that. Come back to that on Tuesday. Mitch, you got anything else?
Oh man, just really excited. I mean, just so happy about the way the banks have been collapsing and the asset that was literally invented because of those banks failing, and then the government's bailing them out taxpayer money and no one getting prosecuted. It's just cool to see the inverse correlation between banks and Bitcoin now. And yeah, though you're like maybe pulling back a little bit today. If you look at the 4 hour, where there's no consolidation on the daily or 12 hour yet because it's just too little candles, too little data. But if you go to the 4 hour, you can clearly see that it's very possible that just some sort of rectangle has developed,
Mm-hmm.
and you're just going sideways, and you know that's kind of bullish, like a bullish rectangle developing in an uptrend, and where there's not much real resistance till 38 40k. So still optimistic on Bitcoin. You're just having a pullback today. But I just love how it's been an actual literal safe haven from the equities drawing down. It's so cool.
I'm getting oversold readings already on BTC in a 4 hour. So maybe we come in a little bit lower, but that's likely to set up another continuation here in a couple days, much like
Yeah,
what we saw
yeah.
there 2 weeks ago.
Yeah, the oscillator has reset on the standard RSI. You're at 63, so you're still in the bullish control zone, but you're at the lower end of it. I mean, that's like perfect. And any pivot that happens at this point on the 4 hour will uh, will begin the development of hidden bullish divergence. So a continuation would be implied. So there is nothing like, even if you can look at the 4 hour oscillators, there wasn't bearish divergence. It was just really bullish convergence. And yeah, I don't even know if like it's even gonna see 31k for a back test before going to 38 40k. Like I just, if something seriously wrong would have to happen for a drawdown to occur, that would take you down that far. The volume that came in on the breakout was extremely significant. So, and the volume that preceded the breakout that came in even on the fake news is elevated. So you have a very real breakout, and anything at this point would be just consolidation. You're just going sideways, letting the oscillators reset because they've been nuclear. And once they reset, then you'll get another big rally. But maybe after that big rally, you'll start actually seeing some buyer exhaustion on the 4 hour, 8 hour, maybe 12 hour. It'll take a while for the daily. But yeah, I just think you've just begun the first impulse, and you're going sideways, and eventually I think you'll be breaking 35K and continuing to run. But yeah, we'll see.
They almost did it yesterday, but I'm looking, take off the pattern, take off all the extra dots and everything. Sorry, take everything but the patterns off. 38.7, just for everybody here. That would be my target far before year end, and you could exceed that, but we're still up. And I've said this all along that I didn't think it was going to be this summer. We had that big first run. I had said no, not yet. But now I'm inclined to say this is in a position to go run to 38,764. That's the big target one on the crab pattern, and then we'll go from there. That's for me. Nothing's going to stop it until then. You pause here. Consolidation doesn't really matter, but this is your larger zone. So where really, when I started with Bitcoin today, we're looking for a B point. You're looking for a long-term B point against that pattern that comes like this into the zone, B point, something like that, and then the next leg into next year. And it really is still a story about next year, but you are setting up quite nicely. That are the way that we're lining up that scenario does give us all the indications that this is where we're going. The typical halving cycle. Maybe it is self-fulfilling. Maybe it's just because that's when everyone they've been trained to think like that. That the halving cycle does this, this, and this. So be it. You want that kind of allocation, and structurally against that narrative, it is playing out. It's playing out the way it should. So let's see how this comes together in the next, I don't know, 4 weeks. November should be pretty good seasonally. That we could see that target shoot into that golden zone. Like I said, I think 38, 30, 38.7. I'm good with that. 38.8.
Yeah, and okay, pullback happens, whatever. I just like right now, and it's kind of been like that for a while. Even with this whole like sideways consolidation on Bitcoin since March, like I don't, nothing makes sense in this world anymore, and except Bitcoin, because Bitcoin is just mathematics, right? Like infused in the financial world, and we've been betrayed. Our governments are infiltrated by crony capitalism and even way more nefarious things like complete totalitarian. I think it's like communist takeover in 2020, in my opinion, but that's for another day. Uh, so, with all that being said, this is the alternative to that complete scam system that is so brazenly like broken now that Bitcoin's the only answer. And this is why I have tons of Bitcoin art all over my house. This is why I own a substantial amount of it. Uh, and it just, I don't know. Like, you tell me something that makes more sense than this, like than Bitcoin in this stupid effed up clown world we live in now.
Yeah. Well, people look. The long-term chart is undeniable. Whether if that was Google or Microsoft or whatever, um, this is that's a nice build here. You can do. Where's the parabolic thing on this? Because that's what this reminds me of. Is your
Are you talking about the long term chart,
Yeah, but where's the parabolic tool for
the curved
trading it?
line?
Yeah.
I mean, it's a curved line. It's on my favorites bar. It's just literally called curve. Yeah, I can't.
Let
I don't know what bracket it's in. I
me
haven't
see.
looked at my drawings panel. It's got to be like. I know. Oh. Oh.
I'll have to look that up. No, you know what I want to draw here though. I want to draw
I
the
found it. It's on the square, like the rectangle
uh-huh.
one. That's where you get the curved line. Oh wow, what is that? That's crazy. Yeah, not the T, but just
I
above the
got it.
T.
There you go. That's what it
Yeah,
reminds me of.
curve. Yeah.
When I think about that, when I think about the kind of move that BTC is doing, And we could have a mass inflection and correction again, but you're on the upswing of this, and I been looking at this upside down, left and right, and boy, it reminds me of 2019, 2020, and we could very well have a retest of this line eventually,
Hmm.
maybe higher up, but this this is so intact that it's just a time factor for you to get from there to up here, whether that's if, whether I've got to form fit that, you know maybe it's like that, but no, joking, but you get the picture that the longer term trend behind this has not changed. I would even say on a monthly, that's a massive 3 bar breakout, 5 bar breakout on the monthly
Beautiful.
chart. That's 32K. And so if even if it's a slight back test, 32K doesn't get violated, and you ride that uptrend, and this is going into the next 12 months. I mean, think about it. A year from now, we're going to be a week away from the biggest election of all of our lives.
Yep.
It's my life,
If
and
if there is one, which I'm just like at this point, I fear they may cancel the election because they will manufacture a crisis that would warrant that, and stupid people would believe it because they remember the media have their back in every regard.
yeah,
But yeah, anyway, yeah, okay, but yeah, sure, it is the biggest election if it actually is going to proceed. Sure, if they allow it.
yeah, if they allow it, we'll see. I mean, and again, the crisis. So most of the people in here, we're talking 15 years. You got to go back to your last major crisis. That's actually almost too long in terms of markets. But with Bitcoin lining it up, and the way that it is, I think it's the long term support. That's a totally different chart than a lot of the major the big stocks we looked at, the AT&Ts of the world, the Verizon. They look opposite to that. And here's my last
Yeah.
point. So I've been saying this for crypto, no matter what your crypto is, and there's a lot of crap crypto out there that's not worth the time of day. But yet again, there's other crypto that look, what's going to be the next cycle of this? What are going to be the ones that receive the allocation so that you can get this kind of a move? And I keep telling people, listen, get the patterns. Oh, where'd that go? No, that's not the one I was looking for. Get the patterns that are looking left. Oh, come on, where'd it go? Here it is. So think of it this way: if we were looking at Bitcoin and it's 2000 and whatever, 2016 to 2019 scenario, a lot of people were drawing that kind of a thing on Bitcoin, or even this kind of a, how to encompass all this action. The thing I come back to, harmonic standpoint, is XRP with patterns looking left. And the pattern said this an hour ago, hour and a half ago, signpost to future price action. So it's not going to happen this week, this month, or even this year. But something like XRP with a pattern looking left, that we know this is a major cycle consolidation conclusion, that the next one is up like that. For all the crypto, I want things that look like this. And
Yep.
then they go and retest whatever the static high is, 886 level. And so XRP is one of many.
It's a dream. Yep.
Yeah. So think of it this way: every dollar that you put in XRP someday becomes $5 or $10 or more.
Yep.
That's how I think about it. You have to really do the work by holding in there and just doing your time, because look, XRP, I remember 2017 people talking about it. It was pennies, pennies down here, and did a big thrust move, came all the way back down. That's fine. I'm talking about the new cycle, and what I think for XRP, and you can do this for any of them. The pattern measurements, connect your dots, all right, and it should set us up for at least a Gartley test that's 265. just connecting dots. And we can do
Hmm.
that with a lot of crypto, but you're going to have to do the time to get out of here, but we're really close to setting more crypto off like that. So that's what I'm going to leave for today. Mitch, thank you for your time today.
Yeah, man.
Great stream.
Absolutely. Yeah, I got actually got my first appointment with a personal trainer today for like first time. I haven't had a personal trainer since I was training for Alabama. So I'm my body is not ready. I'm going to be literally destroyed. So gotta like mentally prepare. That's like 10 minutes. So it's kind of ran over. But
You got
yeah,
it.
man, thank you for having me.
I'll let you go. You get running, and I'll catch you later, all right?
All right, man. Wish me luck.
You got it. Thanks, Mitch.
All
Everyone give
right.
Mitch a shout out. Have a great one. I'll catch you next time.
Much
Um,
love, Scott.
much love to you too, brother. Take care.
All right. Talk to you soon.
Alrighty. Everybody else, that's where we're at for today for the long term. So you know, kind of an update, super long marathon stream. Big thanks to Mitch. You guys know where to get Mitch. Mitch Ray TA over on YouTube. He's there every night. Best TA show, I feel, period, on the web. So check that out. And for everyone else, listen, just buckle down here. Um, we're going to be able to read this like a map. And here's some, I just saw this on my Twitter. So that's what I posted. And that was just amazingly 2 weeks ago. And we're at the conclusion here. I mean, actually, this 4 hour chart's already been reached. My point is, though, the patterns have been pointing us in the right direction consistently. We want to put ourselves in the right spots at the right time. And that's what we're doing. So let's focus in on today, tomorrow, going into the end of the month. I'll be back here on Tuesday. I only gave away one gold membership today. So I'll give away one more. Next person that types in GOLD, you'll get 30 days. And also, you'll be able to get to our option seminar, which was moved to Monday, 10 a.m. You have to send a note to Miss Stephanie to attend, but we're going to go on with that. All right. Appreciate that to everybody. Thanks again. Great session. And hey, Nancy Z, you win the gold. You got to join the Discord. Really quick for all of those folks that need the update, where to go? Get over to harmonictrader.com. And looks like there and here, Harmonic Trader. Become a basic member. And everyone that you saw what I was doing with the charts, all of that is available, free trial to any of the software. But I say everyone should get to sending your username to hpc at sr-analyst.com to get you access to the software I was talking about today. So all of those patterns are automatically generated. You want to be on top of what these structures are telling us now. So if you have any questions, reach out to me, subscribe to the channel. Anything else, you can reach out to one of the moderators on Discord. All right, folks. Appreciate that. Great session. I've talked my voice out. That's what I have for tonight, for today. Have a great one. Come on back on Tuesday, folks, 12 noon. Until then, have a great one. Go get them. We'll see you next week. Take care.